price of oil is surging again. What the heck does that mean for you? Why should you even care what the price of oil is besides having to fill up at the pump? Glug, 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 glug. Well, reality is that soaring oil prices have a big impact on everything. Everything. I want to discuss the implications of this with you on the economy and on inflation. And it all starts with Russia and Saudi Arabia. Why is it always those guys? Those guys again. Russia and Saudi Arabia out there causing trouble because they are extending their oil cuts. They're reducing the production of oil by 1.3 million barrels a day up until December. That is sending oil prices higher because demand is staying pretty high right now. People want more oil. People need to do stuff in the global economy. In them cutting oil production, well, I mean, it makes sense for them. Why not get higher prices? Their oil's not going anywhere. It just sits in the ground, so you can leave it there and just sell it for higher prices and sell more later at a higher price too. Instead of selling it to everybody for cheap, you got to work harder to make the same buck by selling lots of oil for cheap instead of selling less oil for more money. So that is what is driving up prices right now. And it's a big concern because oil and inflation tend to move pretty close together. So as you'll see here on the chart, the red and green bars, that is the price of West Texas crude oil. Okay. You can see how closely it lines up to the orange line on the chart. The orange line on the chart is inflation. So you can see there is a very, very direct correlation to the price of oil and to inflation. When the price of oil goes up, inflation goes up. When the price of oil goes down, inflation goes down. It's a pretty direct correlation. Sometimes one moves faster than the other. You might have a moment of inflation where inflation moves really, really fast and the price of oil goes up too, but not as fast as inflation does, for example. And the same can be said on the way down. But this is the reality. If we look back at the last 20 years, the price of oil and the inflation rates have basically been moving step in step. Now that, of course, is problematic if the price of oil continues much higher. Current price of oil, $86 a barrel. Not super dramatic prices at the moment. I'd like to point that out. We have seen the increase in the price of oil, but the increase has not been like absurd beyond belief. But if we get up to $100 per barrel of oil or above that, that starts to become really problematic because, as you probably realized, everything you do depends on oil. And as excited as I am about wind energy and solar energy and maybe bringing some more nuclear back and all that kind of stuff, the reality is that almost everything depends on oil. You need gasoline, you need diesel. And yeah, I know, I love those Tesla semi trucks. Man, those things look so sweet. You seen those? Those are awesome. But they are an extreme minority of vehicles on the road. And in fact, projections for most major economies is that even by 2030, most major economies won't have passed 50%, maybe China, of vehicles on the road running on electric. That means that right now, especially in the short term, especially for the rest of the year, rising oil prices mean rising shipping costs, mean it costs more for you to go to work. If you work in an office downtown, you have to commute every day. You have to spend more on that gas money, which means you have less money in your pocket. And then when you go to the store to buy things, everything's now 10% more expensive because it costs 10% more to ship it. And it costs 10% more to run the machines to make it, and so on and so on and so on. Rising oil prices go right along with inflation. And that is a problem for the global economy right now. That's also a problem for the Federal Reserve, who's probably going to keep rates moving along higher or keep them where they are for a lot longer than people expect, which has a lot of economic uncertainty attached to it. Remember, the job of the Federal Reserve is to get inflation back down to 2%, currently at the 3.3%. That means they're getting closer to their target, but we're going in the wrong direction again because the price of oil is going up, and that affects inflation. Now, before we get into the rest of the story, if you are not yet signed up for the Wealth Mastery newsletter, you got to check it out. It is the best damn newsletter in the cryptocurrency industry. Every single issue. We've got altcoin alpha. We've got DeFi alpha. We've got airdrop alpha. We've got alpha on everything. Alpha on alpha. So much alpha. We got great memes too. Great memes. Come for the alpha, stay for the memes, guys. You can join our 75,000 weekly readers by signing up using the link in the description of this video. So as mentioned, higher oil prices could spark that wave of inflation. Oil above $90, problematic. Above $100, a recipe for a renewed run in inflation if economies can hold off deep recessions. Deep recessions bring demand down. Lower demand can also help reduce inflationary pressure, let's say. Right now, we are looking at a potential, though, very interesting. All this talk about a recession and all this damage happening economically. And right now, we're actually at a situation where we're looking at a pretty solid third quarter for U.S. growth. Currently estimated to be like 5% growth or something like that. That doesn't sound very recession-like to me. Does it sound like it to you? No, but we do have things starting to catch up, and the rise of oil prices could be an initial canary in the coal mine. Now, look, oil prices come down pretty quickly, too. Somebody starts producing a lot more. Somebody floods in the markets. As Ed Moya points out here, rising oil production from non-OPEC producers can partially offset what we're seeing right now with OPEC cuts, or particularly Saudi Arabia and Russia cutting. Can somebody come in to replace that and provide enough oil? Potentially, but it remains to be seen. Also, the U.S. government can't really do too much these days because they have this thing called the Strategic Petroleum Reserve, basically a bunch of big barrels, building-sized barrels, sitting full of oil. They have been aggressively drawing that down for about the last year now, trying to keep inflation under wraps, provide a bit of relief to the average person in terms of the price of oil and the price of everything, of course, along with it. But that Strategic Petroleum Reserve is now at its lowest level since 1983 after record drawdowns in the last year. So it's been 40 years since the Strategic Petroleum Reserve has been this low, and the economy's expanded a lot in 40 years, let me tell you that. So that is problematic. It means the U.S. government has a lot less power to be able to keep prices low. And of course, it's a Strategic Petroleum Reserve. It means they actually have to keep some of it around in case shit hits the fan. So they can't drain the whole damn thing. And then, of course, here you go. Biden cancels Trump's drilling leases in Alaska's largest wildlife refuge. That's a sensible thing. That happened a day ago. That makes sense, doesn't it? That makes sense. Oil prices are spiking. Let's drill for less oil. That'll make a lot of sense. Make everybody really happy. The Fed's Raphael Bostic has said interest rates will stay higher for longer than people think. This is basically what the Federal Reserve Chief Jerome Powell has said as well. So be ready for interest rates to stay high for a while, which puts a lot of pressure on a lot of players in the economy. Oil prices going up means that inflation is likely to rise, which means that interest rates will stay higher for longer, meaning that more companies can go bankrupt because they cannot afford to refinance their debt at 7 or 8%, which is what the bank's going to charge them now. That means potentially lose your job. That means you potentially lose your house. That means the demand falls. It means more companies go bankrupt until we find a bottom somewhere. Then they cut rates. Then they print money. Then the good times return. Then our magic internet money goes to the moon. Then our tech stocks go to the moon. And we're all hilariously rich again. But we have some things we need to work on in the global economy. And look, I don't want to sound alarmist here. I want you to have the information that you need to have as an investor. Again, oil prices can come down real fast too. Demand could drop significantly from some players as recessions continue to bite in the EU and stuff like this. We could see new production coming in from non-OPEC sources. All this kind of stuff is a very real possibility. So you can't be too alarmist about this stuff, but it is something to keep an eye on. If we continue to see those oil prices ticking up, it creates more risks for inflation to go back up, which creates more risks for the interest rates to stay higher longer, which creates more risks in the economy. And it's important as investors that we remain aware of the risks in the economy. Hope for the best, prepare for the worst. Thanks for watching today's video, and I'll see you next time.